So I've been doing this for 37 years, started digging holes, digging ditches, learned to lay brick, learned to do quantity takeoffs, became a contractor, became a general contractor. And it's for those of you that are in the beginner stage, and I'll try to make sure I can cross over all stages of where you are. It is a business that the harder you work, the luckier you get. Opportunities are abundant. And particularly when the world crashes, they're even more abundant because that's when the almighties all get tossed. So I'm actually giving a speech on Thursday morning, and by way of background, not to do too much touting, but I'm one of the few guys in this business that started as a member of Local 104 Mason Tenders Union and can say I was the New York City Developer of the Year. I won the National Award as the top inner city developer in America, specializing, I was the biggest builder in the South Bronx and Harlem. Started with little buildings and ended up building 10,000 units. I built my first high-rise at 25. And by the way, how did I do it? I got an investor, right? So keep in mind that that is the single biggest thing that fuels real estate. Now what's going on now is you get too much stupid money doing too many stupid things. We're in the longest economic boom ever in history of America, the longest. And we haven't had a black swan, right, since Madoff and Bear Stearns and Lehman, and put the list together. So black swans are always started. If you go back to Black Monday, October 27th, 1987. No, October 19th, 1987, right? Everybody woke up on October 19th, 1987, and the world was wonderful. I was building 40 custom homes in Lincoln Park, New Jersey, all sold. Subdivision I was building, all sold. Woke up in the morning, went to the job site, 40 different homeowners. I want this kitchen, I want that kitchen, I want this tile, I want to change this, I want to change that. The entire day, till about 1 o'clock, was a wonderful day like every other day. By 3 o'clock, the world had come to an end. I mean an end. And the catalyst of the '87 crash was, and there's always, look at the finance world is always the perpetrator. And there's always scams going on, and there's always high-level scams going on. And the perpetrator of the '87 crash was, by the way, the millennials out there, we were called yuppies back then, I think. Right? And Wall Street had been, by the way, Wall Street is basically a drug dealer. I don't know if you guys figured that out. Banks are basically drug dealers, and that's all it is. Right? And the more drugs we can push on you, and the more we get you hooked, the more you're going to take it, the more we're going to give it to you. Because, by the way, at least at my fund, we do about 100 to 150 million a year of very logical loans that add value to the community. And when you add value to a community, you usually are safe. But most of these people, and particularly banks and Wall Street, they're not giving you their money, they're giving you somebody else's money. So what happened in '87 was Wall Street, the junk they were pushing was margin loans against your brokerage account. And I was a little kid, I was 25, I think, and here I am building 40 houses. I got my first $10 million loan in 1985 to put the road through and start the houses. And to put that in context, by the way, 10 million in '85 is probably like 20 or 30 million now. So, by the way, think about that. I didn't have any money. I didn't have any net worth. I was a little kid. I should not have had a $10 million loan in 1985, but National Community Bank found me creditworthy, even though I had maybe 10 grand in the bank. What I didn't know was every one of my 40 buyers, who were all in their 30s and 40s, had gotten their deposit from me for the Buy My Homes on their margin accounts. So here I am in the middle of, I was either in foundations or framed on 40 houses. The next morning, every buyer called begging for their deposit back. Everyone. Now there's a tail to the story, which is a silver lining, which will give you a little bit of insight into why I made it 37 years in this business, borrowed $1 billion, lent $3 billion, and I've never been sued, never gone bankrupt, never had a bad project. And I'm going to tell you what happened. So, fortunately or unfortunately for me, when they put the deposit up, the bank held the deposits, and the deposits were non-refundable, particularly since they were all customizing. So, unfortunately, I said, sorry, folks, 40 calls I had to take to say, I'm sorry, you can't have your deposit back. I broke my ass for 5 more years, got the bank back their money, got my investors back their money. The poor 40 people lost their deposit. They shouldn't have been using borrowed money to put a deposit on a house they couldn't afford in the first place. Now, a little bit of a silver lining on it. At the same time I was doing that, I was building 75 houses in the South Bronx. First time anybody really did for sale market rate housing for Black and Hispanic middle market, which most people in 1985 didn't believe existed even. So I'm in the middle of 75 $99,000 townhouses in the South Bronx. Same stage, you know, they were all going vertical at the same time. And my sister was the sales manager. I go, did anybody call from our South Bronx project to get their deposit back? Not one. And that's when I learned, really simple, cater to the masses, you eat with the classes. Cater to the classes, you eat with the masses. So most of you folks are in different pockets of inner cities, as we call them. I don't like that word typically, but you're trying to hopefully buy something on a mediocre block in a mediocre neighborhood and just make that block a little bit better. So you can't ever go broke making a neighborhood better. Good for the soul, and it's good for the pocketbook, and it's good for the neighborhood, and it's good for everybody, frankly. The world does not need any more mansions, and it does not need any more $10 million condos or crazy $5 million townhouses and blah, blah, blah. So the second catalyst of the last crash, as we know, was subprime. When I was on CNBC and Maria Bartoloma said, and I was the first one to predict it 2 years before it happened on CNBC, and I go, this market's crashing. And she goes, why are you so sure? I said, my bartender owns 35 houses with no money down. And he did. My bartender owned 35 houses. When the shit hit the fan, the banks foreclosed on him, and his credit got ruined probably for the rest of his life. So that was that one. This one's a little bit funkier. I'm giving a speech at the Essex House in Manhattan on Thursday morning for Refi Magazine. And this one's going to be, I'm predicting the crash of the 1%. And by the way, there's a couple of different types of 1%. I'm a 1%er who lives in an 1,800 square foot house that has virtually no mortgage. I live in a little town called Piermont on the Hudson River. My house might be worth $750,000. I could afford 10 times that. But I was raised, I came up, lower middle class Italian, and you just don't go spend what you ain't got. Plus, when the shit hits the fan, what do I got to worry about, right? I got a $2,500, $3,000 payment to make. I can live my life okay. Don't gotta hustle anyone. You know, that's what happens right away when you get too high up the rung and your lifestyle costs too much. You may have the greatest morals in the world, you think. You start to go off the reservation there, and something between true and honest becomes hustle. So what's about to happen is these mega projects are going to cause, in my opinion, the next crisis. You've got more 70-story buildings being built than have ever been built in the history of New York. I mean, we used to see one a cycle. Go back to Rock Center. That was one of them. And then you had Empire State Building. You had the Chrysler Building. These weren't going on at the same time. They were one at a time. World Trade Center, the original one. When that was being built, that was the only thing like it. Now you literally have, in New York City, 20 projects the size of the World Trade Center. Jersey City's got 5 projects the size of the Empire State Building. It's insanity. So what's the investor to do? Where's the pockets? The good news is none of you all are in any of these big mega billion-dollar projects, so you ain't got to worry. If you're in the construction business, by the way, and you're on a luxury job, because I know some of you folks are contractors by day, real estate investors by weekend. If you ain't getting paid, make sure you're getting paid, because if you ain't getting paid, don't fall for the, oh, don't worry, I got the next job or whatever. Get paid, because when this hits the fan, it's going to be pretty big. So the whole thing's going to end sometime this summer, I think. You can go to my website. I write a lot of articles about this subject. And when I say end, it's not ending for you all. There may be a short period where liquidity and the banks pull back because the banks are going to get their ass kicked. They always get their ass kicked. How could you get your ass kicked so much? It's like, just look in the rearview mirror. 2008 to 2011, you got your ass kicked. Why? Because you were greedy. 1987 to 1994, you got your ass kicked. Why? Because you were greedy, and in that case, there were a lot of thieves. We had a lot of S&L guys go to jail. And what Jimmy Carter did in 1981 and 82, I still can't understand how prime ever went to 18%, but I wish I would have bought a 30-year treasury. Called it a day, made 18% of my money for the rest of my life, and quit, but I didn't have any money back then. So let me give you a little tidbit, knowing my audience here, which are good people doing good work, and coming into a little bit of a period that's going to be a little complicated and tricky, because refinancings always become tricky during crises, et cetera. So you've all heard about the new federal opportunity zones. Okay. Does anybody not know about the opportunity zones? Is everybody aware of them? The quick thing is, in the last 30 years, you were able to sell a piece of real estate that looks like this and buy another piece of real estate that looks like that. And by the way, they drew the legislation so that if you want to sell this, you had to identify this, you had to pay an accountant a ton of money. Now the title companies got into it, and it was called like-kind exchange, right? So I'm selling this, I buy that, I don't got to pay taxes. But that was it. It was limited to real estate. If you owned a plumbing company, you couldn't do it. If you sold your plumbing company, you had to pay taxes. You sold a piece of artwork, you pay taxes. You bought an antique car, refinished it, sold it, you pay taxes. Anything in the world, you pay taxes. But real estate lobbyists got this approved, and I don't even actually know when the first 1031 thing was. It was late 80s, I'm thinking, because it was their solution to the fact that they killed the real estate market when they eliminated the tax shelter program. So now what just happened, and there's already been hundreds of billions raised by all the big names you can think of, Goldman Sachs, Merrill Lynch, Bank of America, blah, 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 to go invest in opportunity zones, which are typically neighborhoods that you were all in. It's in Newark. There's opportunity zones in Newark. They're in Camden, New Jersey. They're all over. Just go on. And what's great now is you just go on the internet, pull up opportunity zones. It'll give you the maps. Now, your bigger projects in the opportunity zones are going to be done by bigger developers using Goldman Sachs or Blackstone or Merrill Lynch's money. However, the plumber who sold his plumbing company, or even the dentist who sold his dental practice, let's just say you sold your plumbing company for $300,000 and you've had it for 10 years. Well, Goldman Sachs doesn't want you, but yet you're staring in the face And okay, good, it's long-term capital gains, but you're still staring in the face what amounts to a 30% tax. So just to do the math in my head easy, you sold your plumbing company for $300,000. You are looking at paying $100,000 in taxes, netting $200,000. So let me tell you what the Opportunity Zone program does, and where you all, who I'm assuming don't have a plumbing company you're going to sell for $300,000, but where you all fit. And I'm going to tell you, we're doing it in a different niche. We just announced that we are doing curated, self-directed Opportunity Zone investments. Now we're targeting the individual or company that is made 3 to 20 million. So let's go down to more where your investor world is. And by the way, I hope you have people that you know that have just made a $3 to $20 million capital gain, but if you don't, you do know people who made, whether it be in the stock market or selling their business or selling something, because selling anything, where somebody made a capital gain of $200,000 to $1 million. You should all be promoting, I can do a self-directed Opportunity Zone investment to defer your taxes just for you, as opposed to being commingled with 1,000 other investors at Goldman Sachs where you're just a number. Because by the way, if you grew up in Patterson, and we're very active in Patterson, and you had a Bergen County plumbing company that you sold, you may have a heart for Patterson and want to do something good, plus shelter your money. Plus Patterson's going nowhere but up. In fact, any bad neighborhood has nowhere to go but up, right? And how do you make it go up? You fix the neighborhood. Pretty brain dead. So if I was all of you, I would say, I am going to provide self-directed Opportunity Zone investments. So you could take that $300,000, go into Patterson, buy a 3-family house for $100,000 or whatever they're selling for these days when they're vacant, put $200,000 into it, and manage that process for that investor. So it's a different way for you all to raise capital. It is the single best program I have ever seen, because I've been in every government program for the past 37 years. It is the single best government program, because unlike the 1031 exchange we talked about, which requires lawyers, accountants, you got to identify everything 3 months. If it's maddening what they turn that into. Or even the Section 8 or any low-income housing tax credits. This is check the box. It's literally a check the box. So this is something that I don't have enough time to go into in great detail. Look up where the empowerment zones are. There's plenty of Q&As out there that tell you what it is. Use your network. Say, if you have a capital gain in excess of $100,000, I can help you do a self-directed. I use the word curated, because in that word I use because if you're from Patterson and you lived on some street and you want to give back, you can make money and give back. You can save money and give back. It's a pretty simple program. It's out there. Glenn gave me the high sign. So it's the one thing I encourage you all to look at and take advantage of. It's a great program, and it's good for America, and it's good for the neighborhood. It's going to be good for you. And by the way, most people that sold something like a piece of art or a stock and made money, not a lot of money. If they made $10 million, they got accountants and lawyers up their ass telling them how to save it, right? This is for you all to learn about it. It's a fast learn. And say, I can help you save money on your taxes and make the world a better place. So anybody got a quick question? Because I think Glenn's going to pull me off in a minute.
So just to understand, like a 1031, are you saying you can take your capital gain and put it into an Opportunity Zone without taxes?
You can take your capital gain, right? You're deferring that 7 years. So you have to pay that capital gain in 7 years. But here's the real thing. The property that you buy for that investor, or if you are the capital gain investor, if you hold it 10 years and sell it, you pay a 0 to our scumbag government. Pardon my French, folks. I'm sorry. So how good is that? I mean, I can't even believe they figured this out on their own, right? Because it's good for the investor. It's good for the community.
It was the accountants that figured it out.
Yeah, well, no, by the way, I was going to tell you, the legislation's early. When the accounting lobbyists get in, they're going to create this much paperwork. But while it's an easy program, you all should take advantage of it because it's right under your nose. And it's an easy learn. And when the accountants do get involved, because by the way, if you've ever done a new market tax credit project, which I have, the new market tax, we just finished the $56 million renovation of the Opera House in Philadelphia. They were about to tear it down, we saved it. The tax credit document, by the way, just to get $20 million in tax credits to sell to an investor for 10, right? Could be on 3 pages. That document, I'm not shitting you. The accountants and lawyers have turned in, that's how big the document is. No exaggeration. It's $150,000 worth of bullshit. But this program is pretty easy because you're self-regulated. In other words, you just check the box that I've made an opportunity zone investment. IRS chooses to audit you. You just have to show them, yes, we bought in an opportunity zone, and that's it.